long day. My name is Tony, and I'm here to help demonstrate how our natural predictive processes get in the way of living our intention. And I demonstrate every day at the live edge of the market how we can utilize conscious participation and intention and utilize that information to start acting aligned to our intention. And when we act aligned to our intention, we fulfill our intention within reality. If you're interested in fulfilling your intention and making it a part of your reality, then come on board with me as we work together to make that happen. All right, so I use the financial markets to demonstrate this because it's a high performance environment. And in the context of that high performance environment, I'm constantly working on shutting down or separating from my predictive behaviors so I can act freely in the context of the market. Now, I was up about 6,500 a day. I was doing a lot of practice stuff in the prior bars. And so the 11,000 is reflecting that information. So about 5,000 of that's reflecting that information, whereas I was up around 6,500 today just from trading the trend. And the other 5,000 was from coming in here and working on scaling into the positions. I'm much more comfortable trading this type of volatility than the high volatility of the open of the market, and feel much more at ease and at home in this environment. So with that in mind, I know I just started streaming. It's going to take a few minutes for individuals to trickle in. I'm going to watch this current market condition. I'm going to see if there's any reasons why I want to enter positions like it coming back down here. I wasn't watching as it's moving back up here and the buyers are coming in, reasons to buy here in this area as it continues to move up. I'll continue doing that here as I am allowing individuals to trickle in. And then we're going to be able to go in to see what everybody would like to kind of do today. Do we want to try to continue to trade this current market condition? Do we want to go back and talk about this move as it's coming up down into these areas, cycling through here, right? One of the reasons why I went short actually in this area, and then looking for the long positions. So what we did was we came down into this area and rejected. Upon that rejection, there's a nice little short entry right in here, testing the buyers, price actions coming down, and then exit that position in here. This gave plenty of room to add into the position. And then as the price action came down into here, exit, anticipating a rejection from this area. And why from off of these highs? That was the low volume node on the long time frame right in here. Seed of Life, how's it going? Yeah, day 3, right? I don't know if it's day 2, day 3. I don't know. I deleted the day that was in there and put the added day. So I think it's probably day 2, but day 3 sounds good too. Yeah. So that's what's going on. Now, the question is, what do we want to do as a group? Do we want to go in and trade this current market condition? Do we want to go back and demonstrate on prior days and how to utilize auction market theory in a prior day? Do you want to see the build of the pre-market analysis? Do you want to see how everything comes together in auction market theory? And then how do we utilize the data? Do we want to do that in the London session where activity is much smoother? Do we want to do that in the afternoon in the US session? Well, not necessarily in the afternoon, but like after 10:30 a.m. in the US session, after the volatility starts to go by or starts to slow down, right? Because here's the thing about the US Open, right? In these types of prop accounts that most individuals are using, you don't have the risk around you in order to be able to maintain your positions, or not just maintain positions, but to scale into areas. And if you can't scale into areas, it means that when you enter, you have to be right. And if you're not right, you're going to get stopped out. And so you're completely at the whim of the market. And if you're at the whim of the market, you're not able to manage the position itself. The market has managed the positioning for you because you can't manage the position because you're all in and now you're going to be all out. Because the volatility, you can't add a bunch of contracts because the market's moving way too wide for you. Thank you, Success Forex, for the follow. I appreciate you. Thank you so much for the support. You guys are amazing. Love this community that's growing here. This is my second week, starting with my second week of streaming, and the following and just the sheer support you guys are giving are just absolutely amazing. I appreciate each and every single one of you. But going back to the risk, right? And so when the markets slow down, it gives us a chance to be able to think about what it is that we're doing, how we're going to structure into this market, giving us the ability to be able to structure in. And yes, we can do it off of off of the micros, most definitely, right? And which is a possibility as well, and something I might be looking at switching over to as I'm developing my methodology to come off of a cash account to a prop account. Why? Because that's what you guys are looking for. That's what you guys need. And if I do this off of a cash account and do this off of 10, 15 contracts, you guys aren't going to be able to follow that. And so what's the point in that? So that's the direction I'm looking at this going in over time. That's what I'm working towards. I'm still a sim right now, and the reason why I'm sim is I did attempt to do this live, and the performance anxiety behind it, wanting to perform for you guys, kind of messed with my psyche a little bit, the psychology. And so I backed away from that and went into sim as I'm learning to provide some entertainment. How am I going to speak to you guys? What am I going to teach? How do I explain this stuff at the live edge? I mean, it's been since 2019 since I took my last trade prior to coming out of retirement of April this year. And I haven't ran a trading room since 2011. Things have changed a lot. The dichotomy of things have changed a lot. And so it's just a matter of putting it all together and giving myself the time to do that so I don't scare everybody away, from one, but two, so I'm able to grow into this process. Because isn't that what really walking into our intention means, right? Sometimes we have seeds that we want to plant that just aren't going to grow in our current environment. So we have to plant the seeds that our environment is going to be able to sustain and allow that harvest to start adjusting the environment a little bit so we can start planting newer seeds. And I hope everybody understands that analogy. Sometimes we want to start something and we just want to get to the end, but we have to allow ourselves to grow, to nurture. And that nurturement, as we're growing, changes the image of our landscape, changes the image of our environment enough to open us up to new information, to new ways of doing things. And now we grow into what it is that we want instead of demanding that what we want happens right now when the gap is too wide. And we have to bridge that gap to get to the next phase so we can bridge that next gap until we get to exactly where we want to go. Because sometimes we're just too far away from that final destination. Crystal, thank you so much for liking the stream. I truly appreciate you. I appreciate all the support, guys. Sometime this week or next week, I work with a guy to help me with OBS and getting everything set up. I do have alert boxes and those type of things, and a chat box that will be coming up on screen. It's not working right now, and I just don't have the technology wherewithal, or the wherewithal of technology, in order to be able to do that. So give me a little bit of time. We're growing, we're fixing, we're moving as things are allowed to move and grow in this, and it's all part of the process, and that's part of what I want to demonstrate to you guys live. Just because it's not happening perfectly right now doesn't mean it's not happening perfectly. Just because we're not exactly where we want to be right now doesn't mean that we're not getting there. It's the journey. It's the walking of the path that leads us to where we want to go. And when we get to where we want to go and we enjoy the path of getting there, we're not tired, we're not burnt out when we get there, and we're really able to enjoy the harvest, the rewards of our journey. Okay, let's get into what we're going to do today. Enough talk about the psychology stuff. Let's get into the meats and potatoes of what it is that we actually have going on. What seeds are we going to plant today? Seed of life. I like the little analogy there. Okay, Seed of Life said how everything comes together. So when you're talking about how everything comes together, Dad's Diner, welcome. Thank you so much for joining. Appreciate you. How everything comes together. You talking about how we bring everything back together again in the context of the plan, where to find our areas, those type of things. And then, of course, are you looking at the demonstration as well into how to pinpoint the entries from the shorter time frame order flow? Because that's exactly what I do. I get my areas from longer time frames, from daily perspectives, and then I move into a shorter time frame, like a 30-minute, and then I'm entering around order flow around those areas. Right? So it's a top-down approach, right? I start at the big picture, then I work down, and then as I'm doing the whole process of working down and utilizing order flow, I'm bringing that back up into the upward vision, the upward plan and perspective. Why? Because what works from top down needs to work from down up. And what we're finding, like, for example, in science and physics, for example, right? We have a pretty good understanding of the physics of how the universe works, the laws of the universe, but we're having a very difficult time figuring out how the quantum works. Well, if the quantum isn't aligned to that bigger picture theory, then that bigger picture theory has to be adjusted. And so that's how I know if I need to adjust the way that I build my plans and my analysis of the visions of the market, my pre-market analysis. Because if my short-term entry isn't working towards the plan, then I need to adjust the theory, because something within my understanding of auction market theory is off. Any questions about that? Any comments? Any concerns? If not, we're going to go straight into how I build a plan, and we will start with today. And then if anybody wants to see how it's done at any other day other than today, let me know, and we'll just go ahead and replay data. There's no sense in using, in my viewpoint, using just static charts. The market, when we sit down to trade, the market's always moving dynamically. And if we practice off a static, we're not allowing the dynamic infrastructure of the market to guide our education and understanding of current market conditions and how they play out. So let's get into this long-term format. So what I've done here is, this is a composite profile. And what I mean by a composite profile is, if you take these profiles and you just go into them and, like, you right click them, you can go in and you can merge these with other profiles. This is a merge profile from the day after June 1st all the way to yesterday. So this profile is almost including all of June. And why did I do that? Because these are all within the range of the prior profiles. So for example, this profile is pretty much in the range, but we have this high that broke out of it. This one's not within the range of this one, so I wouldn't put those two together. I could put these four together, but there's really no sense in doing that because we're in an imbalanced market condition anyhow. Since after January 1st, or after June 1st, excuse me, we have been in a rotational market condition. We haven't been trending, we haven't broke trend. We're just in a rotational market. The market is trying to find value because buyers stop being aggressive in the market. What does that mean? That means that the trend, the imbalanced market condition to the upside um has lost its strength, and so the market's ranging, looking for value, looking to where the market wants to go next. And it's just a matter of understanding the auction process within that information. And so in that auction process, what we have is the body of our profiles. We have what we call value area high and value area low. And what does that mean? That means that 70% of all volume that traded in June, between June 2nd and yesterday, is all traded within this orange colored price range. So all 70% of the volume has traded in that range. That means about 30% of the volume has traded outside of that range. And that's where we get unfair lows, and that's where we get the idea of unfair highs. And if you look at this profile, it's pretty easy to tell just by looking at it that we have multiple areas of high volume in that profile. We have a higher area of volume in the middle of the range. We have another one developing lower here. We have a tiny one growing here, but then we have this larger distribution above where we're at, which is almost as large as the one in the middle. And what does that mean? That means that price has been accepting higher areas of value. And as that happens, this value area can shift to include some of this volume as it starts to expand. But what does that also tell us? If price action is accepting higher prices, that means that price action is like a magnet now. Price is moving into those higher areas of volume. So yesterday opened down here, closed up here. It's just a regular candle. It's nothing crazy. And 70% of its volume traded in this area. Then we have this low volume node in here. What's significant about low volume nodes? It's where price hasn't traded a lot of time in. In order to create these high volume nodes, price has to spend time in those areas. Time in the markets means rotational. So price action's rotating in this area heavily, and it's not spending a lot of time in these areas of what we can call low volume. Low volume in the profile itself doesn't really tell me a lot because we're still in the profile. It's where price has spent most of its time. But when you get low volume inside the unfair highs and unfair lows, we're expecting price action not to spend a lot of time there. And if we have an area where we're not expecting price to spend a lot of time, it's an area that we can say, okay, there's possible rejection coming from that area. Why? Because if price doesn't spend a lot of time there, it's got to move away from there pretty rapidly because it's not spending time there. And so price action is rejecting from these areas and moving back into other areas of value. And that's what the market is constantly doing. That's why it's called auction market theory. What we're doing is theorizing that the market is going to continue to trade in the range, reject from unfair highs and unfair lows where it's not spending much time, and return back to value. And then trading around value until buyers or sellers get aggressive like they did today. Now, just because buyers and sellers get aggressive doesn't mean it's an overall trend condition. However, we can recognize overall trend conditions in shorter time frames. So what is this time frame here? This is a daily time frame of all sessions. So we have Asia, London, and US session all wrapped up into a single profile. And then we come over and we move into a 30-minute chart. And this 30-minute chart, we have this area of value here. Price action closed on this bar above this high, the highest range of our current area of value. That signifies a market shift. A market shift is nothing more than saying a breakout. We broke out of the range. But here's the thing though, we never know until after the fact, does a breakout turn into a trending condition, or does it move back into value? But if we index our new profiles on the actual breakout, we're indexing on the market shift itself. And if we index the market shift, then what we are doing is we're showing that we recognize and we see and we understand the importance of these market shifts. And why are these market shifts important? Because it's going to determine what we need to do if we're moving back into value, or we need to switch and start trading trending market conditions. And that market shift can be tricky, but if we can identify it, it makes it easier to trade around in the moment where the shift is happening. Is this a trending market condition, or is it just another move that's going to move us back into value? For example, we broke out above this range here, immediately came back into value. So this is a false breakout. We didn't even get a close above this high anyhow, so we're not even drawing another profile there. But this one's different. It's significantly closed above this area. That's the market shift. That's identifying, telling us, hey, look, you may want to go from trading value to stop trying to short unfair highs and start looking for reasons to be going long in this market condition. And if you look here, this is one of those low volume nodes, right? Price action here came right down into that low volume node today, rejected, and started moving higher. That's where the trend started from, right there. And it matches the low volume of developing profile, and it matches the low volume of the already static profile itself. And then we can take and say, okay, we're going to index other low volumes in here. What did price action do when it came into this area? And we can go over to the right. Price action came up and it traded right through it, not spending much time in that area. Does everybody understand what I'm talking about here in the context of the auction and the context of the market shift, where to put your custom profiles at, and why we're looking at low volume nodes? Rosie, welcome. Thank you for joining. Appreciate you. Are there any questions about anything that I have covered? Any questions about any of the topics? Anything anybody wants me to go back over again? You all Gucci? I can't use that word. I tried. Are you all good? All right. Let's get into how we put this together. So today, what we did was we opened here and we're trading below value area high of the daily perspective since June 1st. And price action was just kind of trading in this area. We could have gotten a rejection here, but when you look at price and you look at the high volume in here, you look at how the bar closed for the previous day's 3 sessions, and we look at the volume distribution of this high right here. Price action opened, came into low volume here, low volume node, and then rejected and started trading higher. This was an indication to me stating, look, price action is probably going to move into value area high, possibly move into these unfair highs here, can possibly come up and test and look for rejection in these low volume nodes. And that's exactly what price action did today. We rejected from this area right here. We accepted, we moved first of all, we moved higher, found acceptance within value by crossing over value area high, finding acceptance in the high volume node, rejecting in the low volume node, and then starting to develop price, spending time trading in a range around this low volume node at the high. So when we take that into the context of the daily chart of just the US session, what does it look like? And the US session price opened and it came down and it tested into high volume node of the previous day's range. Why is that significant? Because the high volume node, the VPOC, volume point of control, is the highest point of volume in the day's session. So you have this is a VPOC today, this is VPOC, 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 VPOC. What is VPOC? Volume point of control, the most volume. Acts like a magnet to price. Price trades back to that area, and then it's going to either accept in that area and trade lower if it's rotational, or it's going to reject that area and start trading in an imbalanced market condition, which is a trending condition. All right. And you gotta think about this in the context of an auction. If a market is healthy, you're always going to have a single buyer for a single seller. So for every buyer, there is a seller. And if at each price or at each moment that the market trades, there's a buyer and a seller at each one, the market's going to be in a flatline state. And so a healthy market is just a flat line. It doesn't go anywhere, right? That's a healthy market. Markets become unhealthy when they start trending. Well, a trending market is great for us if it's a trending up and we're long-term investors, because that's how we make money in the markets. But it's still an unhealthy market condition because it's not working at its most efficient point. And its efficient point is for every buyer, there's a seller. For every seller, there's a buyer. The efficient point in the market on any given day is the volume point of control, where the most volume traded. For every buyer, there's a seller. For every seller, there is a buyer. And it's a flat-lined area. And it's an area where most trades went off on any given session. So price action came to that area, rejected, and then moved higher. And now we're developing what's called a double distribution. We're developing volume at the high, and we have volume in the mid range. That could signify a continuation of the trend. We could also see a rotation between these two as on the following day as volume starts to find equilibrium and find a mean, find that area where for every buyer there's a seller, for every seller there's a buyer, trying to get back into a healthy market condition. And why does it do that? Because buyers that were once aggressive stop buying aggressively. And when that happens, price action starts to rotate back down into lower prices, facilitating trade, looking to find the buyers. Is there any questions about how the auction works? Because if we don't understand the auction, we can't understand auction market theory. If we don't understand auction market theory, it's going to be very difficult for us to build plans and utilize this information to find structure and reasons to enter off the short-term trades or the short-term chart. And then we take all of that information and we plug it into the 30-minute chart, and then we utilize that chart to define our areas of interest. And then we take our areas of interest over here, and then that's where we decide where we're going to trade from. And so today I had areas. Let's just blow this up. We don't need to see the actual profiles at the moment. We're not utilizing that information. Today, we open right here on this bar. Price action immediately moves higher. We continue to move higher. We come back down. We test in this little range right here. We break out of this range to the upside, okay? And then as we break out of this range to the upside, we start testing this range until we break out again. And this is where we start to trend, right here. And in that trend, We have areas of high volume that price action breaks out of, moves back into, moves away from, creates another area of high volume, price action moves back into, moves away from, and that is how trends develop, constantly moving into and away from higher periods or higher areas of volume. No different than a volume point of control, but the volume point of control is at levels moving higher. Why? Because VPOC itself is moving higher because we have a trend and we're not in a range. And price action isn't spending time in these areas, it's rejecting and moving out of them. And then the ones where it is staying within that time, that's where the VPOCs develop. The point of controls kind of stack on top of each other. And that's what we can utilize as support and resistance to time ourselves back into the market if we got taken out on one of these pullbacks. Any questions about that? Any comments? Any concerns? Seed, any questions there? Did that answer your question, or did you have more information that you're looking for? I'm looking for my water bottle right now. Give me just a second. I'm going to be right back. Okay. Do you guys want to go through a day? Do you want me to go back through on how to create the plan? How can I best support you guys that are here right now listening and participating? How can I best support you in understanding this information if you're interested in auction market theory and order flow? That's clear for me. I already started using volume profile on my trades. Beautiful. Well, thank you, Seed. I appreciate that. How's it working out for you? Maddie, how's it going? Yo, we got in late, so was behind for a while. All that profile and auction market theory alpha you just gave, you got to clip and make it as a video. People charge a lot for that or have to sum up in a bill vids. 15-minute you did it in. Yeah, I know. I've been doing this stuff since 2014. It's not like I woke up yesterday and decided I was going to learn auction market theory. Um, and as for the stuff that's out there and people pay for and stuff, I don't know. I have a hard time with that. I spent $120,000 in trading, content and material throughout my process starting in 98. And I just don't want other people to do that. And then these videos are recorded, and so anybody can use them. And in 15 minutes, they've got all the information they need in auction market theory, and they can start trying to apply it on the charts themselves. And that's the whole point, right? We can provide individuals with frameworks. I can't give you a system. I can't give you anything along those lines. Why? Because we're reading information off the charts. And the way that we see information is shaped by our perception. Your perception is different than mine. My perception is different from yours. Your neighbor's perception is different from yours. Your significant other's perception can be different. Your kids' perception is going to be different, right? Everybody's perception is different. And why is that understanding important? Because perception's going to shape the way that you see this information. And you need to use that information to build the plan that's aligned to your perception, not to mine. So you make it your own. Absolutely make it your own, but the framework is there. But seriously, just just cut it out of this live and put it up. Incredible, useful. I will, Maddie, most definitely. I can absolutely do that. And what I want to do actually is, and it's a good point, I want to take that information and just put an education section up on Discord so individuals can go there and go from start to finish. I've already created some of those videos. They're not posted yet because honestly, I'm learning that the way I explain things, this is my playground, right? I can do whatever I want to live. I can explain one thing one way here and then do it another way. And as I gain feedback from individuals, now I can pinpoint on the information that people want. And I can start building that out. And that's going to be the education. And so we're going to have education on each one of the charts that I have up here, how I'm utilizing it, why I'm utilizing it, and being able to do that in multiple market conditions, right? Just because you can see auction market theory, let's say in value, doesn't mean that you're going to be able to see it in an imbalanced market condition. And if you can see an imbalanced market condition, doesn't mean you're going to be able to see the shift back into value. And then the most important thing, of course, is where do you draw your custom profiles in the first place? Because everybody kind of does that a little bit differently. But my whole thing is, and like you were talking about yesterday, Maddie, being able to recognize and identify where that profile may no longer be valid and what makes a profile invalid because the market shifted from the balanced market condition it was in to a trending market condition. And now we need a new profile. So why are we putting profiles on highs or lows or some random bar that we just pick when we can index the actual bar that triggers a shift and a change and the wait for price to tell us, okay, it's trending, okay, it's moving back in value. And then we don't have to worry about drawing that next profile. And so I really feel like that is one of the important things that I can bring to auction market theory that's kind of like my own. And the rest of it's just like regurgitated information. And so the lives give me a chance to be able to do that. As I start to explain things, people start giving me recognition that they understand. Now I'll take that information, build out the trading section on Discord, and now everybody has the education aspect there or videos that they're just able to go to and watch. So those will be built out. I'm also going to build that out too in the context of trading and asset management. And what's the difference between trading and asset management? Asset management, you're scaling into these areas. Maddie, you might notice I'm up 11,000 right here, and I was only up 6,500 today. Okay. The reason why that extra 5,000 came in, because I was scaling in to this position as the market was coming down. I exited that right before this area of support, and I started scaling back in for long positions throughout this whole process. And in that process, I picked up an additional $5,000. I'm not counting that $5,000 in numbers by any stretch of the imagination. I'm also only on SIM. We couldn't do this inside a prop account. But the rest of the 6,500 that was made today, 100% can be done in a prop account, as long as you have the right type of prop account. You can't be using one that has a high watermark. You have to use one that has a static drawdown. And there's a huge difference between that two. And if individuals want to understand that, beautiful. I am working with a company right now that I am talking to. We haven't decided anything, so I really can't say anything, but I am working on a company that does have a static, and it's not to sell evaluations. It's not to do anything along those lines. I am trying to set it up and so I can do giveaways for evaluations for participants. And then, of course, they have their own codes for their own discounts. I want nothing to do with that because the last thing I want to do is sell prop accounts. What I want to do is literally give you the education that you can utilize to fund your own accounts for yourself. And once you start doing that, you can pull funds out of your funded, put those into a cash, and now start trading. And that's where we take individuals from traders to asset managers. If you get to the point you want to be an asset manager, let's work together, build our own prop firm, and let's take over the world of the financial markets and what we can do in our small retail space. That's my ultimate vision. There it is. and have individuals specializing in different markets. Can you have one, please? See, you're so funny. I'm working on it. We're going to see what happens. I still might be too small right now for them to even just, throw a little bite out, but I also offered two for them that I would be willing to pay for the giveaways until I got large enough, and then we can turn around and have them donate those to, the community. But it is for a static account. And what does static drawdown mean? The way that these prop accounts work here, give me a second. These prop firms are not there designed to get you funded because they pay you to do that. They're designed to get you to pay for the funded accounts. And so you're paying for the funded accounts over and over again because you keep blowing them up. And one of the ways that they make sure that you keep blowing them up is they use what's called a watermark drawdown. And so let's say you have a $50,000 prop account. Okay. So you put $50,000 you have $50,000 in the account, right? And you have $2,000 of drawdown. So you got $48,000 that you can go down to. Well, let's say you make $1,000. You raise, right, your account value by 1,000. And now you think, oh, well, I have $3,000 in there to play with. Oh no. Because what they do now is they raise your drawdown amount by 1,000. So now it's $49,000 and you still only have the same $2,000. So you can't use a technique that I like to do. I like to find a really good, just simple position, open with one contract, and just get myself into my pristine position and lock in $5,000-$6,000, whatever the market wants to give me in that first position. And now I have the market's money that I'm using to scale myself into my first position. And if I take an expense on that first position, then I'll just go ahead and keep doing that until I have a cushion. But you can't get a cushion with a high watermark account, because a high watermark drawdown, because there is no cushion available. They keep raising your risk limit, or your risk foundation of the account value up every time that you make money. But it's not even just each time you make money. It goes off of the high of your intraday. So let's say you make $1,000, right, in the market. You're thinking, oh wow, I'm good to go. I still have 48,000. I can risk some of this. Then you lose 1,000. Well, no. Now you're down to 50,000 again, right? But your watermark is at 49,000. It doesn't drop back down to 48,000. That's how they get you. Now you only have $1,000 of room, even though you made 1,000 and you gave it back. Now you only have 1,000. And so you walk into the next day and you only have $1,000. Whereas static, it stays. And so let's say you have a static account of $5,000 drawdown. It stays at 5,000. You make 6,000, it stays at 5,000. At the end of the day, you made $1,000. Now let's say you have an account value of $301,000, and now you can draw that down to 200 and I don't know. You do the math. I can't think right now. You're drawing it down to $296,000, right? But that's the end of the day. Next day, let's say you make 1,000 and you lose 1,000. You still have that same amount. Yeah, but Apex only does that till you hit 3,000 profit on a funded 50,000 account. After that, you got that 30,000 or more if you got more on the account, and it becomes a static as much you leave in the account. Correct. And correct. Apex is like that, right? But now you're trading in your eval differently than you're trading in your funded. That's the issue that I have with that, Maddie. If you can't do what you do, the whole idea of an evaluation is to evaluate you as a trader, and then you can turn around and change what you do after you're funded. That messes everything up as well. Did that till they so Maddie did that till they took my 7 funded accounts for not trading them for 2 weeks while on vacation. So that was dope. Yeah. Because you have to have X amount of days traded too, and you went on vacation. Where'd you go on vacation at, Maddie? If you don't mind me asking. 2 weeks on vacation. That sounds like a lot of fun. Hopefully it was someplace fun. Um, but I don't like the idea of doing an evaluation. You trade one way, then you go and fund it and you start trading another way, right? It messes with the psyche. It messes with things. I would much prefer to get individuals into an evaluation and trade it the same way. And it doesn't mean that this is the only company out there. It's if you're on your own, Maddie, in terms of you've already done this, you've already been there, you already know the numbers, right? This is for individuals that are looking at evaluations, wanting to get a prop, don't know exactly how to do it. They're still coming in and um what Amar, what are you talking about? Which one? Is that owned chatbot some kind of marketing thing? I don't see it. Where is it? And then Maddie, wow, how I see that. You're gonna trade two different ways. How they gonna know if they even want you trading with them? Haha, fucked up model. Really, they got the prop firms. Think of them as casinos. Vegas was not built because people make money. Prop firms are not there, and you don't have a plethora of prop firms in the market because they're there to make you money. They're there to make money, just like the casinos in Vegas. It sent a message at the beginning of the stream. Okay, I didn't see it. Um, I missed that. So I don't know. And I don't see the first. Well, I don't know. Amar, sushi. Come on, man. Come on. You're the moderator. You do something with it. I'm kidding. I appreciate you looking into it. So Muhammad Amar, he's actually my mod. He's doing a lot of guys here. Hey, if anybody's watching any of the videos, the shorts, the long form or anything else, he's actually the editor. I don't have anything to do with that. So give him kudos. The videos are looking great. I'm getting feedback on that from individuals as well. The guy's amazing. I just like giving him a hard time. Submit to random live streams. Yeah, exactly. And that's exactly what they're doing too. Like you have one in TikTok right now for gold signals available, link in bio, right? From FX Nancy, right? Because they like to come into individuals that are just now starting to stream that don't even really have a lot of people watching or anything else and try to get people to click on their bio because that's going to work. Great marketing model there. Love that. I think I'm going to try it myself. It sounds like it's a great deal. But they go into the small ones though because we don't necessarily have the wherewithal, right, to block them real quick like the bigger ones do. So but Maddie, to your point, yeah, exactly. And my thing is if you're a newer trader and you haven't found and you're still having a hard time passing evaluations or you're still blowing things up and those type of things, it means that we need to bring you in from the ground level, right? Teach you a foundation, not a system. We're going to nurture you with a framework that you're able to build the system, and we're going to get you on a platform that you're going to be able to do exactly what you're doing right now, and you're going to be able to do it when you get funded through the evaluation. So you don't have to change anything about your trading. Then when you get comfortable and you're doing well there and you're making money, now let's get into the asset management and teach people how to actually trade. Where now you don't have to trade to be right. You're trading areas that make sense, and you're taking funds out of the rotations that you get them, adding back in again until you either get stopped out or the market goes. And the only reason why you get stopped out is because you run out of inventory. Can't see TikTok. Don't really want to. Not that young, but curious. Are there a lot watching there? I have no idea. I don't have numbers up. I have no idea how many people are actually watching the stream. I don't really want to know. The way I look at it is individuals. It it's kind of goes back to the whole idea of the law of attraction, right? It's like energy attracts like energy, and like people are going to attract like people. And you know what? If you're down with what I'm talking about, beautiful. Would love to have you in the community. If this isn't for you, beautiful. Go find your place. I just want the individuals that are want to be here. They want to learn. They want to participate. They want to help out with the community. Maddie, you're a great example of this. You told me about the gamma stuff today. I've been watching videos on it and stuff. I got to tell you, I don't understand it fully yet. I do understand Max Payne, so I got that concept pretty well. I do understand hedging, so I got that concept pretty well. But I haven't had a chance to sit down, get the platform yet, actually take a look at it and say, okay, how can I utilize it in my trading? That I'm not quite there yet, but you provided value. This is what I'm looking for. Individuals to help each other. And I need just as much as help as anybody else. Gotcha. Already recommended my Ombre to get on here. Thank you, Maddie. I truly appreciate you. And that's just the word of mouth, right? And it's just going to keep moving forward in that context. And I don't know. I'm excited. I'm excited for the participation that's already happened. I know that I'm not going to be for everybody, but the individuals that, want to come in and really want to. I had a mentor in 2017. I don't believe he is around anymore. I think that he is off in wild yonder pastures. Not 100% sure on that, but pretty sure. He was amazing. This guy, you guys want to see a trader. Oh man, this guy. Yeah, let's go back real quick. I'll show you what this guy was able to do. This is the guy where it was like, okay, you know what? He sat me down for a week and he traded the markets. He was a bond trader and I wanted to trade the ES. And so he did this in the ES. It wasn't even in his market. This guy was like, okay, up bar, inside bar. We're not doing anything here. We're just waiting. It's an inside bar. This bar breaks. We're short in here. We're short in here because it broke this high and did whatever. And then we're going to continue to short here. This bar broke the low. We're buying this low. This bar here broke the high. We're shorting down in here. And he did this constantly. And he did it for about 45 minutes or so. And he just asked me, how much money do you want to make? And at first, I'm just like, what are you talking about? He's like, how much money do you want to make? I'm like, I don't know. And he said, well, you need to know because it's going to determine how long you need to spend trading. He goes, trading is boring. He goes, I've been doing it for so long, it doesn't even matter. I just sit here and I just do it. He's like, it's my ATM machine. I decide that I want to make $1,000 today. I decided I want to go buy a new car. So now I need to make 10,000. So I'll sit there and trade for 6 hours, make my $10,000 and go buy my car. I'm still dumbfounded by this guy because I still have no idea how he was doing it, and he was trying to teach me, and I don't know. And now, of course, the teacher of what I see as the never-ending ATM machine probably isn't even around anymore. It's now the information's lost to me, and I'm like, okay, well, I made a mistake there. But this is what this guy would do, and he was absolutely phenomenal. And I don't tell this story to say, hey, everything is possible in the markets. I'm saying what he did, he was able to do, and somebody can do it, it can be replicated. I'm not planning on replicating that because I don't know if I have the intelligence and the mental wherewithal in order to be able to do that. But I'm going to get as close as I possibly can through my through my version of perception. And I'm already almost to the point where I can say, okay, if I spend an hour in the markets, I can expect an expectancy of anywhere between $1,000 to $2,500 almost on any given day, as long as I'm not trying to trade live and hit my little performance issue that's happening in my brain, or I'm not in super volatile markets like the US session. I think I've proven here multiple times that I can trade these slower sessions. I didn't even start trading this until after this bar. And so these slower sessions in here, I can absolutely trade these things. You start getting into here and you just give me a one lot because I'm on some form of prop account or something, and I'm trying to figure out exactly where to time my entries in here by holding on to a stop where I can only risk like 500, 7,500 max because I only have $2,000 to work with anyhow. Uh, Honestly, guys, I'm not that good of a trader. I'm not. Not here, not in these wide bars, not in this volatility. You put me over here where these bars start to slow down. I have time to think for a moment. I have time to develop what it is that I want to do. Now it becomes possible that I can do that in an hour. And that's why I started trading the London session around 3 to 5, and it gives me plenty of time. And this morning I was up like $5,500 during that time frame, between 3 and 5 this morning, just trading the London session. And I was doing other things too, and so I was getting into positions like this here, but I was missing, well, I should use this example back here. It's actually better and easier to do. It's here, and I was missing, so I was getting in, like, let's say here into this range. Let's say I was getting out here, but what I was missing was the continuation play. As these bars continue to move, if you get in, you get out, you always have a re-entry. And I wasn't getting into any of those re-entries today. Getting into those re-entries and utilizing the way that I scale in, it could have been a $7,500 to $10,000 day. And since April, I've had 2 days that were $15,000 and $16,000 just trading one lots. And I've had days where I was up 12,000. I've had days where I was up 8,500, and I haven't had too many days where I've had expenses. I mean, I made a huge mistake yesterday. I was down $17,000. I turned around and tried to recover, and I was down 24,000, and I was up $37,000 yesterday at the end of it. But I was scaling in and doing those other things. But I was like, oh, heck no, I am not going to end the day down $24,000. And I traded myself out of it. And that's where Maddie was like, $3,700. Wait, no, that's not $3,700. That's $37,000. What the? Yeah. Well, you can do that if you know how to act like an asset manager. You're not going to do that as a trader. I mean, you can, but you're going to have to trade 50 lots to do that. And who has the wherewithal or the funds to trade 50 lots in the NASDAQ? I was trading 18 lots in the Russell and 25 lots at the ES at my largest time. I never got past 25 lots and never got past 18. And it wasn't because I couldn't. I had a drawdown. And then that's when it led into why I stopped trading in the end of 2019 in the first place. And I just picked up trading again, came out of retirement in April. Golf, welcome. I won MCB. I don't know what that means, but golf, I get that. I don't golf, but I get it. Welcome. Thank you so much for the follow. I noticed that you followed on TikTok. Thank you so much for the patronage. I truly appreciate you. If there's anything, any questions you have, please ask. Let me know. Let me do everything I possibly can to help you in any way I possibly can, as you've shown your support for me. All right, guys, what do you want to do today? How do we want to do this? Markets are pretty flat right now. Not too much is going on in the current session. We're in an imbalanced market condition higher and a flat market. There's really not much to do. Well, that's not true. Price action, since I've been talking, is broken out of this little area right here and moving higher now. We kind of have another auction here, but it wouldn't be helpful. We don't have any auctions that we can utilize below us. Yeah, so price action is just continuing higher. I'm not too good. Why did I stop trading? Let's see. Wait, you got all sorts of stuff coming at me, Maddie. Let me back up here. Gotcha. Okay, so you know it's been around when he talks about trading the Russell. Exactly, Maddie. 100%. Well, in the pork belly. So that's my first market I traded. What stopped me from trading? Divorce. Went through a really bad divorce the end of 2019, beginning of 2020, wrecked me for quite some time. Went through a huge state of depression for a couple years. It almost killed me in 2023. Blood clots. Blood clots came up from my calf up into my lower lungs. And of course, at my age, why would you get blood clots? Because you're not doing anything. What's my big trades filter? I don't know, to be honest with you. I haven't looked at the numbers. I don't know. We can look real quick if you want to, but I have no idea. I don't even know if I can actually tell you what to even look at for the filters. Um, you're gonna be like this guy. Let's look. Deep trades, deep print. I'm not even sure which indicator it is at the moment. Is it this one here? So I have on aggregated trades, manual and low. Then the plot settings, standard deviation. I don't know. This is all Greek to me. Um, and then zone settings. There's my colors. I know the colors. Is that helpful? And then let's look at the other one and see if there's, because I didn't really see any inputs there for the filter itself. So let's look at the other one and see if there's any filters in here. There you go. If you can make, if you understand what this is telling you, then you got my numbers. I'll go through each one of them for you. You can take a screenshot if you want them. I feel so dumb right now, but it shows you that literally I'm not trading the dots, right? At least you know that much. I'm not just putting dots on there like, oh, wow, look, blue, buy, right? No. No, 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 no. Single prints, border width. I'm not seeing even anything in here for actual filters. I don't even know where you would go in and change the filters. I don't know. Number of columns, position, size. Does any of this help you? Maddie's like, who is this guy? Making me feel really dumb, Maddie. Giving me a complex, man. Damn it. Who let you in? Jesus. So there you go. There's the filters. I literally only have the dots up to give me the visualization because my brain doesn't have the capacity at the moment. I don't know if it ever will again. I'm 50, so it starts to slow down. But in here, when this market is just flying, it gives me an indication of being able to look and saying, okay, is that rejection? Is that acceptance? Am I looking for a pullback here? That's all I'm using them for. And I don't look at the dots and saying, okay, that's what it means. I'm actually looking at the information at that point. Because I can actually read this information and tell you kind of what it means. But my first trade was actually in pork bellies. My first trade was in pork bellies. My second trade was a option in orange juice, of all things. I did a put option at 104 and I covered it like 78, 79. I called my broker and I was like, can I get out of my option? He's like, what do you want me to do? I'm like, well, how do you get out of an option? I don't know. He's, you want me to buy a call? And I said, well, what's a call? No, I don't want you to call me. I'm calling you. So dumb. I was 20. I had no idea what I was doing. My God. And then a week later, I pulled 33 points out of the main index, S&P 500 main index at 250 points in one day. And then I thought I was like high on life. And then 2 weeks later, that account was blown up. You're welcome. That was my first account I blew up. And then a couple weeks later, I ran into an attorney online in one of those little chat rooms or whatever for some things. And I'm working with this individual and he gives me $15,000 and we trade the $15,000 and like 2 weeks later, we've got $30,000 and he's like, well, I made my money. I'm going to part ways. So he did his own thing. So I took the $15,000 that I made, I put it into another account. And then within about a month, I ended up blowing that account as well. And so that was kind of my early trading experience. I would do really well and then I wouldn't. I would do really well and I wouldn't. And one of the reasons why that was the case for me is it was very difficult, and it still kind of is for me at times, to be able to identify the market shifts. Maddie, oh damn, them ladies be making us crazy. Thanks for sharing. You went too fast on the filter on the big trades. It was minimum 40. It can be very helpful to move it up to 60, or Fabio is on 60. Okay, so Fabio's on 60. All right. So I went too fast here. I'll slow down. And so, yeah, here's the 40. You're saying it's better over at the 60. What is it filtering out anyhow? I mean, I don't even know exactly what this is doing, to be quite frank with you. I have no idea. I know that it's looking for imbalances in the footprint itself, and I can see the imbalance that it's looking for, right? You got 98 comparatively to 38 or 35, right? So you're seeing aggressive buyers there. I mean, the aggressive buying to me at that point in time really doesn't tell me anything in the context of that particular price, right? So you got 98 buyers, okay? Fine, beautiful. But if you don't understand context, and then here's my favorite. This is my favorite one right here. And this isn't one of those, but it's kind of similar. It's the 46 and the 6. So you'll get like 40 and 0, and you get a dot. And it's like, okay, price didn't even facilitate. The auction didn't even facilitate at that price level, right? And you're going to give me a dot. Thanks. Yeah. When I saw that, I was like, okay, you know what? I'm going to question the validity of these dots quite a bit. But let's see if that actually limited them or anything. Oh yeah, there's a lot less dots. See? Look at you. You already helped me filter my charts. This is what I mean. I'm going to keep you around. Whatever I need to do to keep you happy, Maddie, you just let me know and we'll just work from there, all right? I like this. It actually limits the dots significantly, a lot less dots. But you know what there's a lot less of by doing that, though? As when you see the print, it is every one. Okay. But the other thing that I'm noticing here that's limiting here are what I call auctions. And I don't know if you've noticed this or anything else, or if I'm just crazy or just making stuff up in my head that doesn't actually exist. But I might have to bring this back to 40. I'm going to have to. And I might leave it at 40, but I want to share this idea with you and see what you think. Because that's all it is, just an idea. I mean, guys, look, okay? I'm old enough in life to know one thing, that I think I know a lot more than I actually know. Which means that I hold a lot of assumptions to things. Therefore, I like to look at what I think I know as a theory instead of saying, okay, yeah, I know that. I know very, very little. I have a plethora of, I love that word, of theories. This right here. Maddie, take a look at that. Okay. That little area right there of buyers and sellers. So with that big trades indicator, you can basically filter out retail and only see the big traders. Okay, yeah, so it's basically like icebergs, right? But you was using it another way, so 40 might be good because you're breaking the rules of the shit. This gives me an auction. Buyers and sellers are participating heavily in a particular area, not in a VPOC. Buyers and sellers are aggressive in particular areas at the almost near the same price. I'm anticipating price action to rotate back down into that area of the auction and move back into the direction it came from. What do you think about that theory? See? Auctions. And what happens around this auction of imbalance? Probably don't come back to it. And we don't. But when we go back into like this one right here, this one's definitely going to be tested on the high side, right? So we have an auction here, right? Price action came up, rejected. We have our auction tested. There's your short. I see I'm using it in a new way now. That's the way that I have been perceiving this. Instead of looking at these areas of volume points of control within the bars, where can I signify peak areas of auctions that are taking place, what I call auctions taking place, expecting or anticipating rejection to come back for the pullback to give me entries into continuation. And then I'm not looking at this as sellers coming into the market. This is now actually signifying possible rejection and support in the market. And if buyers are going to, if sellers are in here, we're going to break this area. If this is buying pressure, right, we should see price action making higher highs, but it doesn't always do that. And what I'm looking at it for is this is an auction that took place. This is an auction that took place. I'm anticipating rotation between these areas. Rotation between these areas. Rejection of where the auction actually took place. So the auction gives me a place of rejection. Where I just have one and then another, that's rotation. And that's my theory. That's what I've been testing. It's actually working pretty good. The most dangerous thing is trading is changing what we do because some random dude is saying so and so, but we can always talk our stuff for sure 100%. 100%, right? You get a guy who's like, oh man, and they're like captivated, they speak well or whatever, and they're like, oh man, they pretty much know what they're talking about, right? It sounds like it. And then you go in and you try to do it yourself and you can't duplicate it. Hence my guy that I was talking about that was just able to, I'm shorting here. I'm shorting here. I'm going long here. I'm like, what the hell are you doing? I don't even know what's going on. And he's trading at like 80, 90% accuracy. And this guy, when he's doing in his entries, he's entering like down here. And he's using, even the ES, he was using a 4-tick stop in the ES. And so, yeah, it's very dangerous, right? But you know what, Maddie? You wouldn't be here if you weren't able to separate the two, because you're so seasoned that there's nothing that I could say or do to convince you to adjust what it is that you're doing. You might take some of the ideas that I have and run them through your own personal model as a filter to see if there's any validity in it, but for you to actually use them, no. Probably not. I wouldn't expect you to at all. You're too seasoned of a trader. But for those individuals, though, that let's say they put something like this on their chart and they're looking at buyers and they're looking at sellers, right? And so we got sellers here anticipating price action to possibly come down if we come through this area because of sellers. But if I could teach them to see the rotation in the beginning, right? And look, rotation in between here and the rotation in between here, and the rotation continues, right, until we break out. And then once we break out, we create a new rotation. If we're in auction market theory and we're utilizing volume profiles to rotate around, right, you see the rotation within the trends, you see the rotation within rotation itself. And then when you see the rotation within value area high, value area low, now you're able to scale into positions. And if you're an asset manager, it's like a godsend. True that for sure. I'm going to test it out. I love new stuff, but don't change something that works, I believe, exactly. Especially with this, it could be very expensive, extremely expensive. Take everything I'm saying right now in the context of how I'm reading this with a grain of salt, because this is still a theory that I'm working on and developing. I'm not even fully using this in my own trading right now. This is like I'm bringing you behind the curtain, right? And saying, hey, look, I got this idea. I got this theory. I'm going to share it with you because you're talking about it. But please use it with a grain of salt because it hasn't been fully, I haven't put it into a strategy yet or anything else. Right. And I've only been looking at this information since May. I've never seen it before. I've never used it before. This is all brand new, right? If we look at this little indicator, this little icon down here. Do you see that little icon? Do you know what that icon is? You probably do. You recognize that? Maybe you can't see it in the bottom of my screen. No, you can't. That's rude. Here, I'll just bring it up for you. You're going to know what this is immediately after you see it, aren't you? Yeah. I got into deep shit. I love that, by the way. To replace Sierra charts. But Sierra charts is the only place where I knew where I could get footprints consistently. And I used to pay for IQ feed, just so I could have better filtered data or unfiltered data, because a lot of your data feeds will filter it. Rhythmic is actually pretty good. It doesn't do that, but some of the other data feeds will filter stuff, right? So, yeah. But if you look at the order book of the Nasdaq, almost everything is one contract anyhow. So you just have one lot traded all over the place, even for the big individuals, and that's where you have the reconstruction of the tape and those type of things. What they're trying to do here, I guess, is reconstructing the position, so you can see the actual amount of orders being placed by a single institution or a group. I mean, I still don't even know. I can't quantify in my head exactly how they do that if they could. So that fact that I question that, I just question the whole validity of iceberg orders in that context. Go ahead and group them together for me, but I'm not looking at it as a single individual. 111 contracts came off of here, and most of them were all one lots. That means that there was enough rotation in the market in order to be able to do that at this price action, at this price area, right? Well, here's the auction. Here's the auction that facilitated the ability to get 111 to 112 contracts off going on one lot on the NASDAQ by coming in either using quants, algos, or just hitting the button manually. Sierra charts are the goat of them all, but really outdated. Yeah, well... The only problem with Sierra charts, you need a damn engineering degree to figure it all out, because there's just too many options. Too many options. On your footprint, what is your tick size? Because I think NASDAQ often holds and looks bad on low tick size. Yes, I have 4. So each one of these, it might be 2. It might be 2. Let's look. It's 2. It's not 4. I lied to you. It's 2. No, it is 4. It is 4, because here's a 2 right here that goes into the middle of this range and then up. Yeah, it's 4. So each one of these little areas here is representing a point. And no, you can't read. That's the problem that most people have, right? If you don't adjust the tick size and the footprints themselves, it's not going to, you can't put all the data onto your chart. It's just not going to fit. And then the other problem that you have too is, if you're building your footprint off of a tick chart, or not a tick chart, I'm sorry, a tick size, right? You're already grouping the volume anyhow. And so now you're double grouping the volume. And my head starts to break at that point in time in my brain, because I'm like, wait a second. Wait. So what we're doing here is we're accumulating trades in this area, and then we're grouping that accumulation of trade into a tick size. And now, what do those numbers mean? Damn dude on 4 in London, gotta look holy, huh? If I put all the data on the PC, will explode. Exactly. This is why I get split fills in the Asia session, right? Because I still have it on 4. I didn't even think about that. In the Asian session, I should probably break it to 2. You're 100% correct, but I did not think of that until you said something. See what I mean? This is why I need a community, so I can see my own holes in my own bullshit, right? But I built a supercomputer for all this anyhow, so if it explodes, I've done something right. You can't threaten me with a good time for breaking my machine because I was calculating too much information at a given time. Oh man, it's so funny. And just think, we used to do this off of Pentium 1 cores. Pentium 1s. Does anybody know what a Pentium is anymore? God. I didn't have a delete key on my keyboard back then. I had to use whiteout on the screen to delete anything. And then my screen was just white and I had to get a new screen because I couldn't see anything. It's probably better. I probably traded better. I'm blonde too. That's what the gray is. It's just blonde. Shut up. Leave me alone. You gotta have fun. You gotta have fun. You can't take it all too seriously. God, especially in trading, you'll give up. So I kind of like the 40 because I get still see my auctions. There's not a lot of auctions today though, which doesn't surprise me because we shouldn't see a lot of rejection in an imbalanced market condition. It can just be another signal for that. But you go back to, and that's one thing I don't like about this platform. It takes forever to go back to any significant date. I wonder if I just click on this. Oh, if I double click. Okay, so look at this, right? Look at this. There's auctions all over the place. We got auctions here, we got auctions here, we got auctions here, we got auctions here. Look at over here. I mean, they are literally all over the place. But look, price action keeps coming back to those areas over and over and over again. Nice little head and shoulders there, right? I didn't even look and see which one was higher. The right shoulder is higher than the other one. They're walking sideways. Just shorts, using the session open and close in 5 minutes time frame, and then use the okay, so FRVT, I'm not sure what that acronym stands for, and take the value area low to point of control using date range, then you can use that range next day. That's crazy. Okay. Let me unpack that for a second. Okay, using the session open. Okay, so any session, Asia, Europe, or Asia, London, and US, it doesn't matter. So using the session open and close in 5-minute time frame. Okay, so we're putting a 5-minute time frame chart up. Let's do this. I want to look at this. I want to see this. If somebody's bringing in, because I have to new. God bless it. See, I told you I'm new to this platform. Oh, give me a second. First and foremost, right? I'm sitting here. I'm having a good time with Maddie. We're laughing and joking, right? But just shorts. First of all, thank you so much for participating in this discussion. Thank you so much for being here. Truly appreciate you. And thank you for the collaboration, not just sitting back and just doing whatever it is that you're doing. You're collaborating in here. That's the community I want to build. And thank you so much for being a part of that. Now, let's look at what you're talking about. So if we take the session open, so we're going to index this to the 930 bar of whatever bar that's going to be. So there's your session open that you're talking about. Okay, so this particular bar. Wait, there's an easy way to think of the big trade size. Okay, we're going to get back into that in a second, Maddie. I gotta unravel just shorts for a second because there's a lot of information here. Then use the FRVT. What is FRVT? No, the new day open to new day close. Okay, so so the open to close. Okay, so let's say for example, I can get off this chart then. And sorry, I was misinterpreting what you were saying there. So let's go ahead and go to this chart. Well, that says I don't have a candlestick on this one. God bless it. Here, we'll use all of them. The open and close right here. Now I gotta find. Okay, I'm all kinds of confused. Look at this. Okay, so the 5-minute time frame, and then use the FRVT and take the value area low to point of control using data range. Then you can use that range next day. Okay, I have no idea how to unravel to do exactly what you're talking about, but what you're saying is you can use this range to determine what the next day's range is going to be. And you have quantified that information, is what it sounds like. And you just shared it with me, but I'm not smart enough to be able to unengineer what you just said to put it onto my charts. I think that's what's going on here. An easy way to think of big trade size. If you have more than 3 bubbles, a candle, your size is too low. If you use it in the intended way, of course. Yes, yes, I could see that absolutely, and that makes a lot of sense, right? Because if you have three bubbles in a candle, right, you're filtering way too much data. You've got to unfilter that. So there's got to be a happy medium. Let me play with that and see, because we're still going to have, for me anyhow, those auctions, if I'm going to use those for rejection, which I'm not even so sure I'm going to do yet. But now let's look. So Maddie's saying so happy he's doing this, because at the end of the message I thought it was Chinese, but I wanted to know what he meant. So I'm not the only one. Yes. Thank you, Patty. Thank you. Either we could be ignorant together, or this guy is an engineer just way too smart for us. Fixed range volume profile. Remember the settings to be row size 77 and volume area, volume is 93. Oh, so you're doing a 93 volume area? That means you only have a 7 in your unfair highs and your unfair lows? So in a perfect world, right, it'd be 3.5% by 3.5%. So you're looking at 93% of value. What's going on, City Life? When the network is playing games with you, what do you mean? The previous day profile, really? Correct? Yeah. Use trading view. Okay, yeah. Yeah, exactly. Um, okay. But just short thing, I'm way behind you guys. But just short, the cool thing about the FRVP profile, so that you have the same data on any time frame. So the 5 minute statement is really not necessary, because you use them same on every time frames, as long as you're using a real order flow platform. Yes, not just Trader View. Yes. Okay. I see what you guys are saying. That's going to have to take me a minute to unravel, though, to figure out how I would decode that information into deep charts. Because I'm not even, I know how to change my profiles to some of those requirements. I'm going to have to reverse engineer this, is what I'm going to have to do, because I like this. Works best on the 5 minute. Now, okay, so I got just out of curiosity, just short. I'm not in no way, shape, or form, fashion am I challenging you. How is it that it works best on the 5 minute? Because I understand exactly what Maddie is saying. It should be able to work on any time frame. What is it about the 5 minute that's making it work? And you're using on the Aussie US pair. I used to love trading the Aussie futures. Loved trading the Aussie futures. That market was just so smooth. It was just so nice. It's like the Aussies are just so chill, just like, oh, kind of just whatever. And their price action just rotates, and just nice smooth price action. You'll see in the end of range, you will see adaptive big buy, then there you will sell. On just short, it's because you on TradingView, then correct it, take the volume data, because TradingView don't have tick data, I believe it is. No, TradingView doesn't have tick data? No way. Are you serious? If it doesn't have tick data, then what are you okay, wait. Okay, I'm going to ask a very this is a question out of my own ignorance. You guys are going to understand my ignorance just real quick, and what I'm capable of understanding and what I'm not. Currency pairs, do they now have volume data? Yeah, you use @hast. Yeah, we know. Oh, you just short uses @hast too. I'm sorry, he doesn't know the joke. Sorry, just shorts. It's a joke between Maddie and I. I thought Maddie wrote that. So you use was it ATAS? ATAS? I mean, how do you pronounce that word? ATAS? I don't know. Anyways, and ExoCharts and TradingView. So you're using all of them. How many screens do you have? I thought I used to think I was really cool, so I had 12 27s up. at one point in time that I ran on one machine that I built, and I thought it was really cool having those 12. That's why I had the 12. So it makes sense on TradingView that you say 5 minute is a bit faulty compared, though it works really well still. Yeah, my risk reward is generally 1 to 10, but my accuracy is 42%. That's decent accuracy on that type of that type of um strategy, if I can use my words. Um, I do what I must. Oh, 60, yeah, exactly, right? Yeah. It's not aggregated, I think, not sure. So, Jason, welcome and thank you so much for subscribing and your again just coming in, your kind words. Truly, truly appreciate you. Um, just shorts on Jason. If you guys are interested, I do have a Discord community. If you use exclamation mark in Discord, you should be able to have that. If you're interested in that, then please join because I love this. I love this collaboration. I love how we're talking here. I love what we're doing, and I've got to fix that Nightbot. Get Sushi on it so we're not having that issue with the caps there. Um, it's not aggregate, I think, not sure. Right. So when I was trading currency pairs, right, this was like in 2009, 2010. Um, there is no volume data, so we used tick data to get an aggregate view of volume. And then so what we would basically do is kind of like what Deep Charts and these other platforms are using in their profiles. So we would take the tick data, count the tick data, and have an indicator for counting tick data, and then that became our volume indicator. That's what we used for volume, was basically how many ticks were flowing into the market at any given time, aggregating that out into a time and giving us volume data. Dude, I've been printing on 6E, so rangy. Value area to value area is really easy money. That is daily value levels, meaning yes. You're welcome. I'm here to help, Maddie. Hey, you know what? At least my ancient knowledge, right, gets to help some people. I'm like the Library of Alexandria over here, I swear. Yeah, I love the Aussie dollar. There's nothing better to trade in my viewpoint in that type of market than the 6E. Love the 6E. And I think it does. I think it has a lot to do with the Aussies and just the culture, right? Because you look at other countries and it's like all over the place, like the yen. The yen can be very, very nasty. I love the Japanese. I'm not saying that they're nasty by any stretch of imagination. But the yen can be very, very nasty in price swings and really whippy, right? Where and it does trend well though when it starts to trend. When it really gets going, but you'll have large spikes, which is difficult to trade when you're doing the volume analysis and shorts. Um, just shorts, just to let you know, if you can, please join the community. I don't know how to reverse engineer everything you're talking about, but I would love to add that in the context of just, understanding. Um, oh, 6E is euro, isn't it? Yeah, 6E is euro. What is 6A? 6A is Aussie. SF is a Swiss franc. I don't even remember what it is. I don't remember the future stuff. I haven't traded currencies since 2012 when I ended my stream. That was a long time ago, guys. 2012 was like a lifetime for me. It was like 14 years. But yeah, no, the 6E, I mean, I remember the first day that the euro traded. I was trading that day and they brought it online and dropped it like 120 points, something like that. I remember the first day that the minis came online because when I started trading, we didn't have any of the mini contracts. There's no minis. You had the S&P 500, you had the NASDAQ, the Dow Jones, all main indexes. You had no minis. I'm ancient. They seem to be nice to me. I'm old. But unfortunately, I can only walk on water in the winter, though. Maddie, how you was calculating volume back in the day is how TradingView is doing it now, and it ain't 100% correct, though it works well. 100%. It's not 100% correct by any stretch of imagination, but yeah, that's exactly how we were doing it, and we were doing that in 2008 with our little, programs that we were using. Multi-charts was one of them, because multi-charts took one of the platforms. The Russians got a hold of the code. I don't even remember what the original was. And then they recoded and rebranded it and made it multi-charts. So you have multi-charts that came out, and then that was about the same time that Ninja came out. But before then, really all we had was TradeStation and Oak. But Oak was only for spreads. Crazy stories you got. I'm here for them. Love this space. Glad to hear it from someone who's been through it. I got stories. I got stories for days. If you know anything about the military, I got a coin from the FBI. It's sitting over there. I might show it in the camera one of these days just for another story, but I got that over in Afghanistan. Yeah, I know. Maddie, I got stories. So, no, and so then multi-charts, and then the Sierra charts, and then, but Ninja's pretty much the only one that's still around from, the original dinosaurs. I mean, you can still get TradeStation, but I mean, who uses TradeStation? I don't even know why you would use TradeStation. Because I mean, the radar and stuff for the screeners used to be pretty cool. I used to use the TradeStation screener for finding news event stocks that I would then use just the time and sells and trade the open of news event driven stocks for any form of news coming out, guidance of earnings, anything along those lines, splits, anything along those where you're expecting a plethora of traders to come in and get into that market. And then you're just looking for the imbalance in the time and sells, because usually it's going to go up before it goes down, or it goes down before it goes up. And then you're just getting into that position on the opposite side as it's coming through. Yeah, this is kind of like this is more like a show and tell session here than an actual teaching session. What an incredible expensive time you've been through trading. Yeah, I know. now everything is cheap. Yes, that's why I was like, when you gave me that thing and I first looked at the price, I was like, oh man, I looked at Spot Gamma yesterday and said cheap. Haha, that is opposite of what it is. Everyone says it's expensive, I know, but it's from my perspective though. Well, and then I mean, I haven't got it yet. And the only reason why I haven't got it yet is because I noticed that I was listening to one of the videos from 2020. I mean, this is like back in 2020. It was like 2020 is like ancient in the technology of changes and stuff. But Bookmap did something with Spot Gamma. And now Spot Gamma is supposed to be somehow coded is in some way into Bookmap, into their heat map, and you're supposed to be able to see the information in the heat map, which makes me question if I need to get Spot Gamma or just get that Bookmap. I don't know. But yeah, I mean, look, Maddie, to get data, just to get the data feed into my house from the BMI satellite dish that I use to get the data, that data was $550 a month, and that's not including exchange fees. And you didn't have many exchange fees, and so you had to pay the $120 a month just to get the CME. So you have $120 plus $550, and I had a nice little nifty pager that I had too that would give me alerts on price alerts, so I can call my broker and tell him what I wanted to do. And that was another $250 a month for that. It's like $1,000 a month just for data. And that's not even including the charting software and then commissions. Commissions were $50 round turn back then. I'm telling these stories and I'm thinking in my head, I'm like, oh my God. And at first, when I first took my first trade, it was $100 round turn. And then we got it down to 50, and then we negotiated it down to 35. Day trading the S&P 500 with with prints coming, your fills coming out of the printer 30 to 45 seconds, sometimes 60 seconds after you hit the button. You don't know where you're filled at, you don't know where you're at, and you're paying $100 to $50 round turn for your broker that's not even there to help you. I did not hear that about Spot Gamma, but it'd be very cool if that they collabed. But it will just be an extra bill when buying Bookmap, not a free extension. I think probably, and I haven't had a chance to do that yet, to do that research. But if I go to Bookmap, so if I go to Bookmap and Spot Gamma, this is what AI says anyhow. I guess on here, combining Bookmap and Spot Gamma provides, okay, so that was all about giving, where did I read that at? It was on a video. The video is, so you can natively integrate the Spot Gamma data into the standard Bookmap platform using the Cloud Notes feature and the Hero indicator available through the Bookmap marketplace. So it looks like you have to have both, but it will run it automatically through that. And then I was watching the Gamma 101 Spot Gamma from Spot Gamma on YouTube. It's got 91,000 views. Gamma 101 Spot Gamma is the name of the video. Let's see. I was watching this video here when they talked about that, and they said it was coming soon, that they're working on something with Bookmap. They couldn't say exactly what it was, but this is the video right here. Yeah, I was on the floor. I was on the floor for commercial mortgage-backed securities. Yeah, $100 round turn, such wild times. Like, no, it's not her. It's not too many people have done that. Right, that would be helpful, absolutely. So that's something I want to look more into because of what I heard on the video. I don't know if maybe they didn't do it or how it works. I don't know, but I really want to kind of go into that in a little bit more detail as well. There's just so much stuff out there. It is, I know. You can use one simple thing also called the high and low of the last day, then divide the range by 287, then use that range from next day open. Are you okay? Just out of curiosity, just short, are you a quant? I mean, like, seriously, did you like major in mathematics and have like go into like stochastic calculus and stuff? Because the way that you're talking and describing these things, are you an engineer? Are you an actual quant or a financial engineer? Because you're taking the high and the low of the last day, then divide the range by 287. Where the hell did you come up with 287 from? High and low and divide the range by 287 from next day open. I learn a lot. I am a B Tech student. Okay, that makes perfect sense. That makes perfect sense. No, you're so sharp. You are so smart. I mean, I could oh my goodness, you were down here in you're in Twitch right now. You're like the first person I've ever had in Twitch. Well, thank you so much. I appreciate that. Um, oh, this is amazing. 287 is the number of 5 minutes in a day. Okay. See? You guys can tell that I'm wearing my ignorance on a sleeve. I am not a quant guy. I don't go into these numbers. I had people that did that for me. That's how I got the whole volume thing happening on the tick stuff. But I was on the trading floor for commercial mortgage-backed securities, and so back in 2005, 2008. So I wasn't on the trading floor for a large, like actual trading in the indices, but I did have a back end look at that within the context of the commercial mortgage-backed securities, and that's where I left the CMBS market in 2007 before 2008 happened, and then I went to a prop firm, an actual brick and mortar prop firm, and that's where I learned how to day trade stocks using the time and sells. And then I went retail 2 years later. You had a dream to convert 10,000 to 100,000. I love it. How's that working out for you so far? It sounds like it's pretty good. I mean, you got these number things tied down. I read that message out full. Sound interesting. All of it sounds very interesting. Just short. Just out of curiosity, how long have you been trading for? How long have you been working on converting your 10,000 to 100,000? I love that you're on Twitch right now too. I'm like geeking out about that. 4 years? Wow, 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 wow. Will you join Discord? Pretty please? Please? What do I need to do? Oh goodness, I'm being serious though. Would love to have you in the community if you're inclined to join. A lot of we're brand new, right? I've just been streaming for the last week and a half. This is my second week of streaming. And we're already starting to build a great community in here. You love talking about and love 1v1 with finance guys. Yeah, absolutely. If you don't mind, definitely join. We have some very like-minded individuals. Maddie, I'm sure, can, fill you in with a lot of stuff. I can't fill you in with the technical stuff. You noticed that I didn't even know 287 days is, 287 bars is in a 5-minute view. That's not my bread and butter. Um, I just trade auction market theory is all. I'm simple. A simpleton. Maddie, nah, what I mean, when you're reading a Twitch message, you got to read it full so TikTok and YouTube hears it. Gotcha. Yes. Well, it's also coming up in here. Well, you guys can't read chat right now either because it's not even turned on. I'm working on that. My guy was supposed to be available yesterday at 2, then he was supposed to be available today at 4. He's canceled on me twice now, so I might need to get a new guy, but he does great work, so I'm going to get him to do it. It's just probably going to be another day or two, so we just need to be a little bit patient with him. So 287 is the number of 5 minutes in a day. I had a dream to convert 10,000 to 100,000, 4 years. I love talking about it and love 1v1 with finance guys. Yes. So that's all from Just Short. Yeah, no, this is absolutely amazing. You guys are getting me thinking now. Um, but yeah, here we are. No, all of it sounds very interesting. So his main one here is you can use one simple thing also used, the high and low of the last day. So you take the high and low of the last day, then divide the range by 287. Then use that range from next day open, but do it in Bitcoin USD Binance. Oh, we have a Bitcoin trader in the community too. I'm gonna share this with them. If that's okay. Do you mind if I share that with them? Just short, it's completely up to you. This is your information, and I don't want to take anything away from you at all. If you would prefer that I didn't share with somebody, let me know. But um, it's all very interesting. This guy's brilliant. Oh, what just happened? Saying stop spanning. Okay, please, thank you. I appreciate that. Let me get that into Discord real quick. Let's see. Discord pre-market. Where do I want to put this? I need a new place. Let's see here. We're just going to create a new section in here, and we're going to call it we're going to call it Bitcoin info. Sounds good. Something to share with you. Bitcoin people came from live chat. There we go. Thank you. Appreciate that. That's amazing. I love it. Yeah. What else do we want to discuss? I mean, I feel like I have hijacked this whole session here talking about my old dinosaur stories, about trading and stuff. What do you guys want to talk about? 5:30 a.m. India time candle. What's the 5:30 a.m. India time candle? And India. So right now it's 1:23 a.m. in India. So it's GMT plus 5:30, 5.5 hours. That's your time zone, 5:30 a.m. India. Okay, yes. Yes. Um, yes, I see what you're saying. GMT 5:30. I got you. Like I said, I was in the Marine Corps just short, so you gotta potato head language for me sometimes. The alphabet can confuse me. And you start putting numbers with the alphabet together? No. No. Not happening. So the 5:30 India time candle. I'm a bounce. Thanks for all the fun. Very good session. This informative, fun and knowledgeable. No hijacking, I think. Peace out. Maddie, always a pleasure. Thank you, sir. Appreciate you. You're so fun. I hope you stick around. Thank you for being you. Um, just short, I think it's just you and I in the chat now. Um, is there anything else that you wanted to go through, or do you wanted to talk about, discuss? 40. What do you use? Your imbalance is 300%. Interesting. Your imbalance is 300%. So I don't know anything about TraderView. I really don't. TraderView wasn't even a platform. So I retired from trading in 2019, the end of 2019. I just got back into it in April. Oh, your imbalance is 300% for your bid ask. Really? No way. Why are you using a 300% on your bid ask? Are you doing that also in the indices, or are you only doing that in Bitcoin? To sort after the main part. That makes sense. Oh, you're giving me all sorts of stuff to look into. I didn't even cross my mind to even really look into this stuff. You're making me feel inadequate in my my trading knowledge. You can't trade ES or US indices because you're in India, right? You're not allowed, right? Right. It's like we can't trade the US dollar, but in India, you can't trade the US markets, correct? So yeah, you're trading Bitcoin, are you trading anything, any foreign? Are you doing anything like off of the Nikkei or the Hong Kong exchange or anything along those lines? Can you do those things? I know that India can't trade the US markets, but I'm unclear if they're able to trade on foreign exchanges or just their own. Aussie USD, a Nifty, Bitcoin, your all-time favorite. Okay. Wow. Wow. Thank you so much for sharing the information. I know Maddie got a lot of information out of that. I got a lot less than that. I'll get Maddie to set me up and explain it into potato head language because what you're sharing is phenomenal information. First and foremost, well done. Your SL is $1 to make $15. Okay. Okay, your stop loss, I'm guessing, is $1 to make $15 in Bitcoin or in the Aussie. Interesting. Magic of range. Wow. Wow. So you're using a $1 stop loss to make $15. That's impressive. That is so impressive. And you're at a 42% win rate, you said? Wow. That is impressive. You're going to get to your 100,000. You are definitely going to get to your 100,000. You're amazing. You are absolutely amazing. And you've done this you said you've been trading for 4 years? Yeah, 2 years lost, 1 year break even. Well, yeah. I mean, that's a given, you know. But your fourth year into it, that's where you broke profitability. And were you able to recoup the losses of the first 2 years in your fourth year? So you were down year one, down year two, then you're break even year three, you're making money in year four. Have you recouped the expenses from year one and year two and year four? This year you're in profit. Wow. Congratulations. Congratulations. You absolutely deserve it. You've put the work into it. You've put the time into it. You can absolutely tell that you're dedicated. You know your stuff. You're sharing information that I'm not sure that anybody has really heard before as well. You're you're amazing. Truly, absolutely amazing. Um, Thank you for coming in and sharing your information. I feel bad. I feel like I have gained so much more information from you than, you're doing that you're going to receive from me. And I'm just truly grateful for your expertise and for your willingness to share. Thank you. That's awesome. Do you go into a lot of chat rooms and share this stuff too, or, is this just you popping in, deciding to share? First time you discovered Twitch? So, like I said, I just started trading last week. I'm not trading last week, but streaming last week. My first trading stream in general was last Monday. And so, yeah, this is all brand new to me. I'm just figuring it out as I go. Um, I came to demonstrate how we can separate from the predictive behavior of the predictive engine of our mind, or subconscious conditioning, and how we can use conscious participation to get out of the stands, the bleachers of watching our predictive behavior taking action on the court, and we can step onto the court and take action. And when we do that, conscious intention starts to drive our actions rather than conditioned um behavior. And that's where I really started this stream, but it's really turning into so much more than I ever thought it was going to be. And the Human Performance Lab is about entering this place of pressure, like trading is, and doing it live here, and being able to recognize when the subconscious is in control and being able to shift into consciousness. That's where my work has developed so much more than my work in trading. I know enough in trading to be able to make profits, but to understand it at a mechanical, mathematical concept, that's beyond my capabilities. This is much more about the human development and utilizing this construct of the markets as the court, if you will, the presentation to be able to show that. That was my point of this. And then you coming in, Maddie coming in, you guys are really challenging me in the trading world. And I love it. And I'm so grateful. Um, so just short saying, my main problem is, to be honest, and the market changed drastically every month. So I would like to hear other people how they tackle it. As in February, I made 371.3%, but in March it was 27%. If this could be solved, I would love that. I wanted to master it. As you know, it is a very, very, very hard profession. 100%, extremely hard, right? This is why you don't hear a lot of people that have the stories that I do, because most individuals aren't in the market this long, okay? So you're saying is in February you made 321.3 percent. February was a trending market condition, right? And then in so in February 321, 27% in March. March was trending as well, but not as steeply trending. So I would say, and tell me if I'm wrong, because I wasn't watching the markets really in February or March. I think I told you I just got back into the markets in April. What you're doing is in February, March timeframe, strong trending market conditions, volatility was higher in February over March. Am I correct on that? As what I'm trying to do is assess the market condition in February, the change, the shift in condition between what you experienced in February and what you experienced in March. Because starting on June 1st, we stopped trending and we entered a rotational market condition that's still true today. The market was moving very, very, yes, the volatility. So one of the things that I have defined is the difference between volatility and momentum. Volatility moves so fast that it's very difficult to even react to it. Momentum moves quickly, but not too fast, so you can still react to changing price. Do you feel like those are two viable definitions that can be used in the context of volatility comparatively to momentum? And the reason being is we can take if we can define those two things, yeah, exactly, right? Now, if we can define those two things, right? Now, how do we turn around and identify the volatility, identify the momentum, and identify the low volume? One of the things that I was working on in the early aughts was what we called the gear changer. So think of like a manual transmission, right? And what we were doing is utilizing tick data to be able to formulate a way to predict incoming volatility. So we were utilizing and as the tick data shifted and moved higher, there's more ticks coming in, more volatility. You want to shift your time frame based upon that. Another thing that I did for volatility was I utilized, now of course this is outdated information, right? Because it's so different now. But the ES used to trade in about a 6-point range, normalized, 4 to 6 points. And then we would have ranges of 10 points. When I'm talking about ranges, I'm talking about the value area between value area high and value area low, right? $1 move in Sol makes your money double at 100 times leverage. So in February, that was moving like in one go, $5 move in New York session. So you got the answer why 300%. Yeah, it makes sense. But strategy works at high leverage, only opposite to people say. Got you. Got you. Okay. Let's work on that. Let's absolutely work on that. Let's see if we can't help you how to read those market shifts. This is something that my skill set comes in with, honestly. My skill set's not going to be with numbers and figuring all that stuff out. My skill set is coming up with and defining a big picture and then aligning a process to that and then testing the process back into alignment to make sure it all fits. And so if you're wanting to collaborate on that idea, let's absolutely try it and see what happens. Worst case scenario is we don't figure it out for you. Best case scenario is we move into figuring it out and then we find the answer. Completely up to you. But that's something that I could definitely see. And I think if we brought in minds like Aftershock, who trades Bitcoin in the community, Maddie. There's a couple of other individuals, Seed as well. I think that we could all really collaborate and possibly come up with something. You want my Confluence to add to mine? Maybe that would be great though. Yeah, I see what you're saying. Absolutely. So I'm all about market structure, right? And when the market shifts in structure, if you don't understand what's happening in that shift, then you're going to be like, for me, it was very difficult in like 2016, 2018 for me to trade a trending market condition because I was constantly trying to trade value, right? When you see value, you're constantly going long at unfair lows and you're constantly going short at unfair highs. But what happens when the market starts to trend? It's great when it's in value, but what happens when it starts to trend? And then how do you create developing value within the context of an overall trend? And if you can't pick up those market shifts, it's very difficult because you're constantly looking for value and looking for value, and then the trend continues and you're trying to short the unfair highs and you just get chopped up. And you don't, and the short side is not going to cycle through enough for potential profits because of that. And so I got very adept at understanding the market shifts. That's why today, the moment that this event occurred, I'm already drawing my new profile. And what am I looking for my new profile? I already have developing value. We're in a trending market condition on the 30 minute. So we're imbalanced on the 30 minute. We're still balanced on the daily chart, right? But I can already index areas where I'm anticipating possible rotation and rejection, even picking up potential rejection of value. Why? Because we are already developing value at a much higher level in the profile. We should anticipate price action to come down possibly in value, possibly down here, but not even make it an unfair lows to make your higher low to continue the trend continuation. These are all things that we should be analyzing in the context of the market structure because it's all part of the auction process. And trend I can't trade, I will not lie, as in crypto, the price move straight without stopping. I, though, invest in that situation like cementing investment systems. Yes, yes, absolutely. That's exactly what you want to do. And you're not getting the pullbacks, especially in that market. So you know what you do at that point? And you may have already tried this. Have you ratcheted down to a shorter time frame so you get a little bit of a pullback? Have you done that portion yet? Or have you gone into a lower time frame? So here, for example, let me show you what I'm talking about. And maybe you've tried this and maybe you haven't. But let's look. Can you get into a shorter time frame? Because I don't look at Bitcoin. I've never have. I've never looked at the cryptos. Okay, so I don't know the charting of those. But when they're in a trend, can you go into a shorter time frame chart and find these ranges right here? Find a range like this before the trend resumes. Is that possible to do? Because if so, I'm going to show you something. Because you need inventory in your positions, right? Isn't that what you meant when you said that you said something? Okay, so it's too risky for you because the leverage is too high. Gotcha. You're trying to smooth out the leverage. Okay. If you're smoothing out the leverage, if you smooth out the leverage and you're looking at like a daily, for example, oh man, because of the leverage and because that market, I can only imagine the swings in that market. How can we smooth that out for you? Am I thinking in the right way to your problem? How do we smooth out the time frame a little bit. Okay, beautiful. I understand the problem. Let me think on that. Let me put some thought into that. I might even put some charts up and take a look at it myself. But we need to smooth out the price, the volatility. The only way to smooth out volatility, the easiest way, not the only way, sorry, wrong verbiage. The easiest way is to smooth out prices through time frame. But you can only go time frame so high. But what if we grouped sorry about that. What if we grouped daily time frames together? Would that even I mean, of course you can in a weekly chart, but I'm not talking about that. Let me play around with that idea a little bit and let me play around with some of the ideas that I have mulling in my head, throw them in the lab, right? Could do a couple experiments and take a look. Big orders can do that, but can't trust lower time frame, too untrustworthy. If I see big trades in 1 minute, might take stop loss not tested though. Correct. 100%. So the big trades could possibly help, right? But what we want to do though is we smooth out volatility by time. And what we want to do is this. Let me show you high volatility, what I mean by smoothing out time. Okay. This is the US Open of the NASDAQ on 9:30 a.m. right here. This is a lot of volatility in here. Okay. This is one of the things that I'm currently working on is this. Let me bring this back into 40. We work with an auction. I don't know how in the world Lambo Rawl did that. He is a US based trader. I see his trade recaps. I think big orders. Yeah. So what I'm doing here in my auction theory is this. Excuse me. Hold on just a second. I don't want to cough in your ear. Just give me a second. I need to do this. Sorry about that. Okay. One of the things that I'm working on is we have an auction. And in an auction, and in my viewpoint, tell me if I'm wrong. If you actually have a truly healthy auction, you're always going to have, for every buyer, there's a seller, for every seller, there's a buyer, and you're going to just have a flat line. There's never going to be any volatility to price because it's all just a flat line. What I'm looking for in knowing that we have auction participants and price action moves directionally or rotational because buyers and sellers are getting aggressive at particular areas or time. But when they get aggressive, they don't get aggressive just on their own. We see a communication between the two around a same price area. Why? Because to me, large traders aren't trying to be right. Large traders are trying to gather inventory. And when they try to gather inventory around the same price at the same time, to me, that's the show of the most efficient form of the auction. Because now we have buyers and sellers almost at equilibrium together. And when I see that, I see it and it looks like this. Let me find you a good auction right here. This is a perfect example. Right here. Buyers and sellers coming into the market. Have you noticed 0-1 bid ask? It's a sign of exhaust candle. Yes. This means sell and vice versa. Yes, absolutely. The other thing that I look at too is when an auction hasn't hasn't completed an unfacilitated auction like this, I'm anticipating that price action is going to break this high because it's an unfacilitated auction. And this might be one of the simplest things that you might be able to look at on Bitcoin, right? It's not going to be we you're not going to be able to use it in terms of how far the market's going to go. But here's your 0 to 1 example, 100%, right? On price action comes up here, it probably came down first, then came up, and then this is the pullback and then continued. But look at un the unfulfilled auction, right? That's here. That's for your breakout from this area to move into direction of trend. You know what in crypto is rigged, like this thing doesn't work in Bitcoin 100%. Yes. Yes. Well, it's just like the currency pairs, right? The currency pairs are unregulated as well. It's the wild, wild west. They're unregulated, so there's a lot of manipulation. You know, people talk about manipulation all the time in the US markets, and it does happen from time to time. But they're not as rigged as they're about as open as a market can be. But you get into Bitcoin, you get into the unregulated markets of the currency pairs, not the futures currencies, but the currency pairs. You're running into the same thing. They're absolutely rigged, 100% manipulated. Yes. And so I need to look at some charts and take a look and see what you're seeing and run it through my perception, run it through what I know, and then come back with you on my findings. That's what I'm going to have to do, because I can show you on these charts as much as I want to, but I've got to see it firsthand in the markets that you're trading and the manipulation that goes along with them. And you're 100% correct. The leverage is just way too high. The way that you reduce your leverage in the US indices, for example, is to go into the micros, but you can't do that in Bitcoin. So yeah, let me put my thinker hat on with this. Let me go to my community. Let me talk to Maddie. Let me talk to a few other people. Let me definitely talk to Aftershock. I don't know her exact name. But let's collaborate and see if we can't get you the information that you need. I know you like to study. I know that you are an absolute student. So let me see if I can't get my community to help you facilitate your learning in this. Would love to. Yeah, please talk in community. I'll read in. Thank you so much. Talking to me. Thank you for coming in and talking to me and this whole collaboration. This is amazing. This is why I wanted to create this community. And it's interesting, right? Because I haven't even been streaming for a week and a half, and here we're already having this conversation. You know, you listen to other streamers and it takes them years to develop something like this, and it's already happening. So just short, thank you so much for being here. Truly, truly appreciate you. You're amazing, and I look forward to the collaboration. And yeah, let's get this going for you. We'll see what we can find out. You're the best. Seriously, I'm so amazed right now. It all happens for a reason. You know, it's so funny, right? We come up with ideas and we come up with other things, and it's timing. It's divine timing. You know, we can't define divine timing ourselves. It's just there's a synchronicity that happens to it all, and just there's a reason for everything. So again, thank you. On that note, though, I think I am going to end the stream today. I have some things that I do need to get done, but I do stream the US Open at 9:30, and then I also stream at this 2 p.m. time frame. Most individuals are in here. Aftershock is not, so I've got to get them involved after the fact. But they're definitely in the Bitcoin and stuff. And let's collaborate on the back end. If you can, go to the Discord. It is Live the Return, and we'll go from there and just see where this takes us. And this is a very, very hard profession, but God, for those of us that are in it for the long haul, it is so rewarding. The amount of information I have learned, not just about trading, but myself and people and just everything. It's been a ride, and I wouldn't change that ride for anything. So thank you very much, everybody, for attending. Just short, thank you so much for the collaboration. I look forward to future collaborations with you as well. Guys, ladies and gentlemen, you are absolutely, absolutely amazing. I appreciate each and every one of you. Thank you so much for the support. If you found value in this video, please hit that like button. If you find video in the channel, please consider subscribing. That way you never miss future content and you never know what might be helpful for you. And if you're feeling extra generous, leave a comment. These are all things that the algorithm absolutely loves, and it really helps small channels like mine to get out there to help other people. And thank you so much for the collaborations, for the conversations, for the follows, for the likes, and all the support. This community is absolutely amazing. The trading community is so unique, and it's full of a lot of amazing people. And I'm grateful to be able to get to know more of you. And I just want to leave saying, I truly appreciate each and every single one of you, and know that you are loved. I love you. Thank you so much for attending. And until next time, be safe, be kind, and know that you too are loved.